57, 65, 74. Resistance on the support on the downside at 21, 10, 4,300, 91, 83. Pivot at 30, support 21, 10, 4,300, 91, 83. Resistance on the upside at 37, 47, 57, 65, and 74. All right. Welcome to some of the new folks that are here. We are trading mini S&Ps we're scalping the market here using the levels we gave out in addition to price action opportunities that occur once the market paints some bars. Combination of both these give us our scalping opportunities or our setups, however we want to put it, and gives us a chance to scalp the market. We're looking with the volatility these days of about 3 to 4 points on our stops as well as our profit targets. Market has calmed down here a little bit, not much. Still getting at 3 to 4 points, I think, is keeps us in the game. 43.30 is pivot, support at 21, 10, 4,300, 91, and 83. Resistance on the upside at 20, 37, 47, 57, 65, and 74. All right. Kind of over the last few hours here, once Europe opened up, it's kind of settled down in a range. The crazy volatile day yesterday, rallied strongly, slowly broke it down, made new lows, and then came all the way back up. So, didn't come all the way back up, but came up the lows very nicely. And now we're just kind of continuing up here a little bit. So maybe taking into account all the stuff that's going on with, again, the overriding factor here is at least for the moment, the Ukraine situation. Obviously the economic situation is not going away with the raising interest rates and inflation in the United States anyway. So I'm sure that will come to roost at some point as well, and that'll be the headline going forward at some point, at least for the time being now, it's not that. So that's what we are trading off of these days. And if anybody has any questions, feel free to ask in the chat box area. We don't mind questions. Welcome them, and you can ask us about what we do, how we do things. Again, we are trading mini S&Ps, looking for opportunities to scalp the market. We put together a trading methodology that we teach in our education course. Find the levels, to trade them, to understand your risk tolerance, understand the risk involved in some of these trades. And we always try to have reasons for us to enter our trades. That way we try to give ourselves a fair chance in here in trading these levels and trading the trading opportunities that we have. It's not only the levels, but the trading opportunities that might occur. In either situation, we always have stress about keeping your stops in place. That way, when we're wrong, we are able to get out and look for a next opportunity. You don't have to fester or drag anything out, because you will get opportunities where you make your more than 3 or 4 points on some of these trades. We're coming up here to our 37 area now. We say an area here because we're not going to be perfect. We have to scale in around an area, especially with this volatility that's in the market. It's a swiftly moving market with lots of opportunity. We just have to be patient and wait for them. That's the key here. Just kind of floated up to 35, 36. Just got up to 575 there. Came off a little bit, unfortunately, depending on how you scaled it. Maybe you got in against our 37. I don't know. Coming back down here to the pivot area. Again, if you have any questions, feel free to ask in the chat. All right, market is bouncing around here. Patience is important. The 37 area, given the fact that we got up to 6, almost 36, be patient, be careful there around it as we swiftly come down here to the downside support area. Yeah, who knew? Kind of moving around very fast, kind of doing its own thing. Not surprising, but again, you can see it's within that overnight range over the last few hours. So patience again is important to wait for opportunities. All right, let's see here. Let's see if there's any economic news coming out this morning. Nothing important. Just a 2-year auction at 10:30, and then a 12 5-year auction. So a couple auctions that will be released later this afternoon. No economic reports, kind of just trading off of what's going on in the Ukraine-Russian situation. U.S. indices managed to cut their losses on Tuesday, but the drop was still deep enough to push the S&P 500 into correction territory for the first time since March of 2020, COVID-related sell-off. The key index fell 1% during the session, resulting in a 10.6 decline since the peak of 48.18 on January 4th. While commodities prices remain elevated, S&P 500 could climb back out of the hole today, with futures tied to the S&P index gaining. They're up this morning. Current market fears are centered around sanctions, though the first wave of them appear to be quite targeted and not that economically damaging. Measures from the United States were leveled against 2 of Russia's largest financial institutions, 3 members of Russia's elite, as well as sovereign debt, but left a crucial energy sector untouched. Moscow has also taken steps to insulate its economy since the annexation of Crimea and Peninsula in 2014, trimming its budget, broadening its trade portfolio, diversifying away from U.S. Treasuries and dollar, bolstering hard currency reserves. Well, that would make sense. They kind of knew this was going to happen, right? The market sees various sanctions as modest and perhaps not as aggressive as feared. For now, one could assess that there's a vibe across markets that Russia troops will hold, but push no further. That's why we rotate back up here, I think, and seemed like after that sell-off yesterday late in the afternoon, they kind of just said, okay, well, maybe this is it. And besides escalating tensions between Moscow and Kiev, Wall Street is also dealing with surge in inflation and quantitative tightening. Investors have been trying to size up the Fed's path forward in recent months. Some economists are warning that inflation could even top 10% should the Russian action result in energy supply shock. As we come back up here to our pivot area, so kind of be a little bit careful there around the 37 area for reasons we talked about. So coming back up here to these highs again, be careful there around 37. It's not as strong a level as we had when we started, only because of the where it traded once the market got up here and got up here again and then bust through. So I would not use the 37 anymore if you're risk averse. I would just kind of just look at the next level above, which is up at 47 again. But if you're want to take a little bit of risk, it's there. It's definitely a riskier trade than it was a few minutes ago. Again, if anybody has any questions, feel free to ask. Bets on aggressive rate hikes that are moving up again in response, with swipe trades are pricing in a better than a 35% chance of a 50 or half a point move in March, up from under 15% a week earlier. Fed governor has also suggested a 50 basis point increase could be in the cards if the next inflation readings come in too high. Really? Well, they're not going to come in lower, I'll tell you that much. We'll see. I'm back down here to lows again. 37 now because of the way this market has traded up here against, got up to 35.75 twice and then traded off. It's a lot riskier right now. Definitely would be very tenuous a level. Like I said, it would have been nice. A lot of cautiousness, tight stop, whenever you want to do it, or just kind of wait for the level above as we rotate back down here to these lows. We did bounce off of our green band there if you are a green band player. Yeah, we're just kind of bouncing around here. We got no economic reports coming out. So again, we're in this little range that we've been at all morning. We'll see what happens. Back up and just kind of just floating around here. Patience is important. Again, one of the 37 is a little bit tenuous right now, so be mindful of that. Anybody has any questions, feel free to ask. It's kind of a much slower morning than it was yesterday, that's for sure. We like to average about 4 to 5 trades a day. I think that's a good number to say average. Definitely been getting more than 4 or 5 trades lately. But that's a good average, I think, if you take it overall. We also focus on the morning hours to give us our opportunities to trade. Again, we always are focused in on having reasons to enter our trades. We'd like to layer in reasons to trade. The more reasons you have on a level, the greater your confidence level should be as well. That way, we try to take that, again, the fear factor out of trading. and having confidence in finding areas and levels to trade. And the reasons to trade are, we explain them in our education course that we have, whether they're levels or price action opportunities. And we also try to explain the risk involved in some of these trades, like trying to tell you that right now the 37 would be a lot riskier because of the price action. And we're coming back up here to our pivot. We're definitely not going anywhere fast here this morning, but it's okay. Market needs a little bit of a breather. Nothing wrong with that. It's been very volatile lately. All right, kind of range bound here a little bit. So again, be careful there of the 37. Talked about the riskier this level is right now. If we get back up there, if you're more risk averse, you're probably looking at the next level above there, which is 47 area. All right, but we're just coming back down here to our pivot. All right, very, very quiet. There's no economic reports coming out this morning, so we'll see where that takes us. Another story that's been flying under the radar due to the Russian recent action in Ukraine is that Canada has managed to clear out protesters in downtown Ottawa, which have been camping out there for weeks. The Freedom Convoy movement, which started with truckers demonstrating against COVID vaccine requirements and restrictions, even spread into several border crossings with the United States, including crucial Ambassador Bridge that connects downtown Detroit with Windsor, Ontario. Trudeau ended up invoking emergency measures to quell the protests, which gave powers such as compelling towing companies to remove trucks from designated areas. The disruption was said to cost the Canadian capital more than $800,000 a day in policy expenses and does not include collateral damage felt by businesses in surrounding areas, as the bond market here is breaking down here a little bit. So let's be a little bit careful here if we have inverse trade, which we have been lately. They've broken out of that little tight range, but we have not really reacted to it. So be a little bit careful here on the upside. If you're looking for that kind of trade, which has been lately, but again, that bond market obviously has been looking at, has to be looking at different areas there because of the concerns about what the Fed is going to do. So there is definitely a flight to quality over the last couple of days in regards to what's going on with Russia. And they rallied very strongly there. And but now they're coming back here. And we kind of reacted inversely with them for the most part. But prior to this war situation, we were kind of trading in tandem with them. So be a little bit careful. I don't know which way this is going to go. Are they going to go back to being concerned about domestic issues or the foreign issues? That's so the bonds are looking at right now. The Emergencies Act also allowed authorities to declare certain areas as no-go protest zones, which demonstrators could be subjected to arrest. You could disagree with elected officials. You can certainly disagree with me, but you can't harness your fellow citizens who disagree with you. You cannot hold a city hostage. You cannot block a critical trade corridor and deprive people of their jobs, said Trudeau. Others argued that invocation of emergency power threatens civil liberties, while their expansive nature could set a dangerous precedent for future civil protests. As now the market downticks here a little bit, and coming through to the 21 area, testing this 21 area here. Whatever you do, keep your stops in place. Working the 21 area here a little bit. Again, just keep your stops in place no matter how you trade. We don't love any trade that we put on. And you're right here, the 21 area here. So again, you can decide if you want to take a little bit of profit, you want to scratch some contracts. All depends on what your risk tolerances are. You don't have to. If you don't like the price action, you have choices, right? Right here against the 21, like I said, you have choices here as to if you want to get out of some contracts, if you want to scratch, you want to leave it on. And if you don't like the price action, you do have choices as to how to manage that trade, right? All right, continue to downtick here a little bit. That support level I have is down at 10, so a little bit of a ways down there. See what it wants to do if it does go down there. Again, you were given chances there to get out, scratch up, take a little bit of a profit. You're not gonna. We expect a rotation off of these levels that we're not going to get them. Then you have choices to, you don't have to stay in the trade. Definitely can manage to get in and out of trades, and especially since we didn't like the price action around it. And whatever is creating a little push to the bond market may be creating a little push here in the S&Ps. Again, remember, we might go back to economic situations here instead of just looking at the war situation. Right now, resistance would be around our pivot area there at 30. Nice trade there, Don. All right, so again, we don't have any other numbers coming out as far as economic numbers are concerned. So we'll be trading whatever noise that comes out of either Fed governors talking or any economic news that comes out in the United States or any war situation that happens. These are all fluid situations that could affect the market. And we have our levels that we're going to be focusing on to try to trade. And then you have to, again, look at the price action to help you understand whether we're going to stay with those trades or not and how the price action is reacting around the level. Those are all choices that you have to make as an independent trader. Here's to just suggest things, and but you have to make that final decision on your own. Next support level we have is down at the 10 area. coming down here to the 10 area now. Quick rotation down here. Surprised me even how quickly it came down here. Again, just make sure you keep your stops in place. You never know what outside influences is creating volatility in any move that we get. And so consequently, that's why we have our stops in place. Very, very, a lot of volatility all of a sudden in the market. We always seem to get that volatility on the downside. All right. Definitely some volatility seeping back into this market. It was quiet there for a bit. And all of a sudden we're pushing all over the place. Next level downside support is down at the even area. Let's see what the settlement price is down at 43 even. Interesting. Only when I put these levels together, I don't look at the I don't know what the settlement price is. Again, remember, they could be talking about a whole bunch of stuff. Uh, yeah, anything could be happening as we are trading that creates some volatility. Uh, Zelensky, who was the Ukraine president, calls up reservists and urges citizens to leave Russia immediately. So that doesn't bode too well for the nervousness in the market in regards to the war situation. I'm getting a little bit choppy in here. Trade the even areas or next support area. All right, coming down here to the even area now. Again, whatever is going on in the background's created some volatility here in the market. So if you don't like the volatility, just lay loose for a little bit. right, nice rotation here against our even area. Took obviously a little bit of heat there on it, but it got a nice quick pop back up here. All right, nice rotation there against our even area. Bond market rally a little bit, maybe inverse trade. I don't know. So we're getting like mixed messages there from the bond market, but that's okay. We're not exactly following the bond market. We're just keeping an eye on it. All right, notation there against our even area. Give you a couple chances to jump in there. Nice entry point there. And nice rotation back up here. So again, patience, waiting to get into a nice trade, and then getting out of the trades that are not going our way gives us an opportunity to take more than your losses and the stops that you got stopped on. So you got to keep that. And that's why we talked about keeping your stops in place so that when you do get a nice trade, we'll be able to jump on it and take advantage of the rotation. Let's see. Let's give you a couple levels here underneath. I don't know. Like I said, I don't know which way these things are going. So 91 is the next level below, then 83. I got 83. And then below that, we've got 76 and 67. Thanks, Don. All right, market still under pressure. Again, you never know what's out there, what's happening as we talk. You don't know what new situations are going to arise. And you gotta just make sure we keep our stops in place. Next level of support we have is down at the 91 area. Resistance right now would be around the 20, 21 area. Very, very slippery little market here right now. So be very, very patient and wait for opportunities. All right, we're definitely hanging around the settlement price here, both sides of it a little bit. Maybe finding a new area to hang out on. All right, market continues to downtick. Next support level we have is down at the 91 area. Got a little bit aggressive here, this market all of a sudden. Again, bonds rallying, could be war related. I don't know. They broke, and then now they're coming all the way back up here into that range they were in all night, most of the morning, I should say. So I don't know. Could be war related. Don't know. Seems like that's what we're reacting to more than anything else. All right, there's the quick rotation here down to the downside really fast, coming down here to the 91 area. Definitely market is under a little bit of pressure, but we're looking for these areas of inflection that create some opportunity for us. Hard to say to jump on these shorts. I mean, you have to be a little bit aggressive to do it, but I mean, it's doable if you're willing to take the risk and know where your exit strategy is. All right, coming down here to the 83 area now. Again, pop right back up to 93 and change there. Coming and continue to push to the downside. Bonds here continue to rally. All right, if you did scale in there at the 84 area against our 83, then you're doing okay with that little rotation here. Again, we're scaling in, so you have to take the volatility into consideration. We're not going to be perfect anyway. Okay, obviously we're getting a nice rotation here against 84 instead of 83, so being careful against the 83 now. We got a nice little push here off of that little area, so the level is not, I mean, obviously it's worked, it just you had to scale in. I know it's kind of difficult to do with the markets kind of moving around, and if you're only trading one lot and you didn't get filled, I get it, but you have to understand the risk and be careful now if you're gonna trade that area, or just make sure you keep a tight stop in place. But the volatility is getting, seeping back in the market, so that's the problem with that. There, you give yourself a chance. You have to almost, make sure you take into consideration the slippage that's involved here. Got down to 80 there. If you did adjust your entry point, again, depending on how much risk you were willing to take and understand the risk involved, maybe you were able to adjust the entry point and got in a little better. or if you didn't, that's fine, because there are backups at the levels, and in case we run through again. Obviously, when there's more momentum going through, the market's going to take everything out anyway. But if you did adjust there a little bit, then you got a nice little entry point, and a nice rotation here off of that, off of our level there at 80, 83 there. You never know when the market's going to inject some volatility, that's for sure. All we can do is trade the markets and take the levels or any price action opportunities that occur. $29 VIX. Yesterday we were at 30, so that VIX is going to go up if we continue to downtick. The rotation back up yesterday created, and overnight created VIX to obviously break a little bit. Very, very choppy here. Resistance right now would be around the 15 area. All right. Trying to figure out where it wants to go next. Resistance would be around the right now, maybe the 15 to 17 area, or maybe 10 would probably be a better entry point there if we get back up there. Next support level we have on the downside would be all the way down at the 76 area. All right, coming back down here to the lows, we're looking at the 76 area next to support, giving us a chance to scout the market around those areas. That's all we're trying to do. Sometimes we get a nice little rotation off of these levels to give us more than our 3 or 4 points that we're looking for. All right, market's chopping around here a little bit. Equity level we have is down at 76. Resistance right now would be around the 10 area. Yeah, now we're at this level. We're just kind of hanging out. Kind of trying to figure out what it wants to do. The S&P's here rotating back up to the upside. And again, if you look at the chat box here, you will find the levels that we just printed up for you. Again, those are kind of a guide to the day. I don't know. I have to give them a call. I don't know if we're going to get back up there. The bonds here on their highs too, so might see a little inverse trade thing going on. That's why we're putting a little bit of pressure here on these some peace maybe. There we are, definitely range bound here a little bit. Again, if anybody has any questions, feel free to ask in the chat. We are trading mini S&Ps here, looking for opportunities to scalp the market based on the levels that we gave out this morning, in addition to price action opportunities. Market here is extending here a little bit to the downside, maybe on concerns with the Russia situation. And we have obviously domestic issues in the United States with inflation and raising rates from the Fed. All right. Coming down here, we get 76 area here. We got down to 80, 79, 76, 75. See what it wants to do here. It's on now below 67. Obviously, we got the 60 area, which we had yesterday, but it's also a kind of a double, triple bottom there. So be a little bit careful there. It could work as a retest of that spike from yesterday. But make sure you keep a tight stop against the 60, and then below that we've got 49. So the 60 area, then 49 on the downside there. If we continue to down tick. Bonds here. upticking here a little bit. Again, if there's any geopolitical situation, you get a little, run to the bond market to hedge. Again, if you look at our chat box, you'll see the levels that we've added on. And we'll see what the market wants to do. Well, we are at the mercy of the market. And remember about got to keep your stops in place. Market is very fluid these days. Continues to be as the VIX is close to 30. As we continue to downtick here, we're looking at the 76 area. Quickly coming down to it. And trying to give us our quick 3 points there. All right, so nice little quick trade there against our 76 area there. Got down to 75 and popped back up really quick. Again, if you have multiple contracts, you're trying to squeeze it a little bit, see if you can take a little bit more than 3 points out of the trade. 3 points keeping us out of trouble today, considering what's going on. But at least we're getting them on the rotations off of those levels. All right, so we have levels down below. We've got a nice rotation there against our 76. We got up to 79. And then continues to downtick here. Again, be careful. Keep your orders in place. Keep your exit strategy orders in place. Keep your stops in place. All that's important as we're trading. All right, we continue to downtick here. Next support level we have is down at the 67. Again, we're just looking for these areas to give us an opportunity to scalp the market. We're not holding these things. We're taking 3 or 4 points out of these trades and looking for a next opportunity. Right now, we've got resistance around the even area. All right, we're staying here on the lows, looking at support at the 67 area. See what it wants to do next. Again, taking the opportunities to scalp the market against these areas. We're not looking for big moves here. All right, we gave you those other levels, as you can see in the chat. Just keep your stops in place, and we just never know what kind of day we're going to have. Every day is a different day, as you can see. We started up, and then all of a sudden we've been breaking down. This bond market also rotating up here to the upside. And again, if you look at the chat, we have our levels up there. Be very careful with this trade. It's kind of a little slippery, actually, and we have to obviously keep your stops in place, but we are getting rotations off of our levels, so use them, and maybe keep your stops in place in case the market gets a little bit too crazy. Continues to downtick here. watch bond market that could push them. If it continues to go with higher bonds, maybe they're definitely, I think, concerned about the Russia situation more than anything else. We'll see what happens. All right, get back here in a bit.
Okay, a couple of quick shout outs and programming notes. For those that are coming in as guests today, welcome aboard. If you have any questions, don't hesitate to ask them in the chat area. Hey, Ariel. Hey, David H. How are you? Jackie M. Let us know. Carl with a K. Mark C. Randy T. Richard A. Let me know back in chat if you have any questions about our services. I'll send out an opportunity to come back, which is based on our subscription. If you like what we're doing here, you want to be part of it, here's an opportunity. I sent it out to everybody in chat. If you have any questions, don't hesitate to ask. We're here every trading day slugging it out. The morning sessions between 9 a.m. and 12 noon, with the body of the trading happening between 9:30, the opening bell in New York, and 11:30. Right now it's 11:36 a.m. Eastern Time on February 23rd, 2022. Use the chat feature to respond so I can make sure you're not a bot. All bots get removed. All those playing possum can be considered a bot, so be careful. This is a unique opportunity for you when it comes to the service. It's focused on the S&P 500 E-mini. It's really focused on the ability for you to trade, right? Yeah, that's right. Saul's been trading for about 25 years or so. He's actively scalping the market for his own account. He is available for those that are part of this service to teach you and mentor you and train you to be a better trader. He has a price action trading strategy. Yeah, it's interesting. This service was live off the trading floor in Chicago, the trading pits. For new traders, experienced traders that are looking to do better based on their trading and trading day. Yeah, 2, 3, 4, 5 trades. If you know what you're doing based on your trading technique. The other thing I'll quickly mention, it's a great time to be in the markets. It's a great time to be in the markets for a number of reasons. One is volatility. You can see that just by looking at the charts. The other is the concept of independence. If you can get good at this, it's a big if you can get good at this, then you can write your own ticket. It's not easy. It takes time, effort, skill, discipline. And that's one of the things that Saul looks to help you with based on his mentoring and training. He does it in a private Zoom classroom, and then it becomes very personal between you and he. This daily opportunity is for traders that are looking for an introduction into our services, those that have a trading talent and they're looking for better information. From a concept of trading education, Saul gives out his proprietary scalping levels during right around the opening bell at 9:30 Eastern time, the cash market. And then as he lays it out, it's a pivot and other levels on top and bottom of that pivot. These are Saul's go-to areas and zones for this morning's trade, or this past morning's trade. He'll set another set for tomorrow morning's trade. And they'll be his guide when it comes to what he's doing based on market behavior, price movement, and then his entries, exits, and stops in and around those levels. And that's what we do every day. So Ariel, let me know what you're doing. David, let me know. Richard, Randy, Mark, Carl, Noro Duden, let me know. Hey, Zahral, how you making it out? Timothy, Rube. Anupam. If you want to come in or invite your friends, it's tradealonglive.com. Tradealonglive.com is the website. Join us every day. Come in as a guest. We ask you to quickly roll over to paid. It's nominal. One of the things I mention from time to time that if you, particularly like today, right? If you haven't made your money that equals the payment to us and more for the month, then you need schooling. You need help in your trading. Trading is a big business. It's a huge opportunity for those that are good at it. And it's a terrible opportunity for those that aren't. So, it's your initiative. It's your deal. It's your ball. And let us know how we can help you. Tradealonglive.com. Tradealonglive.com.